Hello friends, my name is Advait Italia, and today I want to share my insights about the markets and specifically about the futures markets. The futures markets are very leveraged instruments. So it's a part of a derivative segment of the markets. I am a day trader. I trade Nasdaq contracts very frequently. Um, so today I want to share my insights um, regarding Nasdaq futures contracts specifically. The reason why I am doing this is because I want to share the journey, the insights about trading and day trading in general. So this is my first video, and I want to show that with constant hard work and with constant passion, it is very achievable to attain success in financial markets. So with this noble goal in mind, I would like to start sharing my analysis without further ado. So, as you can see, my name is Advait, and I am a technical analyst. I love, the field of technical analysis and how it can be used for, um, you know, uh, forecasting or predicting markets. So today, I want to specifically focus on Nasdaq futures, and I want to share my analysis on multiple various time frames. For example, weekly, daily, and then we can go to intraday, time frames. Normally, I use 5 minute and 1 hour for intraday, and I use daily and weekly to get a broader perspective. So, without further ado, this is my TradingView software. TradingView, I only use TradingView for my technical analysis. Yes, there are other softwares, and there are other platforms that you might use. I personally prefer TradingView, and that is why I use it. So coming on to the Nasdaq contracts, if you see, I will start with the weekly time frame. So in the weekly time frame over here, if you see, this each candle represents a week. So what I did is don't be overwhelmed with a lot of elements in this chart. I will quickly break down everything in a very simple manner. So this is a weekly time based chart, and each candle represents a week. What I have done is I have taken the highs of 2021, and I have drawn a Fibonacci retracement pattern, which straps from the high of 2021 to the lows of 2022, and I have stretched that till the current time frame. Now what is happening over here is, you can see this is the 0.618 level, which is the retracement level. So when I go and when I plot this level, what I am expecting to see is between the 0.618 and between the 0.786, which is this zone, right? There is a lot of chop in this zone. Essentially, from June, we are just chopping around and consolidating on the weekly time frame basis. So, moving on to more detailed approach. So, as you can see over here, we have actually bounced from this red line. Now, I'm a big fan of EMAs, that is exponential moving average. This exponential moving average, that is the red line, that is at 26 EMA, and as you can see, we have bounced from 26 EMA back to back from last in the last 4 weeks we have bounced two times. and this is the third week where we actually paused at the 26-day moving average over here. You can see, so we closed over here. One thing to notice is we have closed over here with a very high volume, above average volume. So if I hover my mouse over here, you can see that 4.1 million Nasdaq contracts have been traded this week, which is, to my humble opinion, it's way above the normal average. So looking at charts and looking at weekly time frame, it is very much evident that the sentiment is bearish. Apparently bears are winning and they are in control. We have a lot of news events coming in few days. So right now, just looking at the price action and volume, right now expect a lot of downside to come. Now let us say if the bears are in control, and let's say if the market goes down, then our job as the trader is to know like at what levels it can stop going down. So the first area of support would be this 0.618 level of the Fibonacci pattern. The next big support will be 14,100, which happens to be this orange line, which is the 50-day moving average. So this is my strong support zone area. So I personally doubt that we will reach 50-day moving average on the weekly time frame. And the reason why I'm saying this is because if you consider the time frame of October to January every year, it's a seasonally very strong period for equity markets. So to have a meaningful downfall in this time of the year, the probability is very, very less. But nonetheless, the macro factors right now are not playing well. Interest rates are rising, bond yields rising. We have two wars ongoing. So the macro is not in our favor. So that is why anything can happen, and that is why I want to highlight these two levels, that is the 50-day moving average and the 0.618 level. So on a very near term basis, what I think is gonna be the support is this lower end of the Bollinger Band. So expect the markets to touch this lower end of the Bollinger Band, that is this level, in the coming week anytime. So this is my take on weekly analysis. So now let's go to the daily analysis. So in the daily analysis over here, as you can see, so first observation that I have in the daily analysis is we are making a constant lower highs. So what do I mean over here? This is the high, this is the lower high, again over here lower high, again over here lower high. So it is evident that we are, if you look at these lower highs, we are in a downtrend. But on the contrary, if you see this, so the lower lows are not actually conclusive lower lows. So this is a lower low, but this is marginal lower low, by very short margin. And then over here we are just hovering around the lows of last month and from August month. So this is kind of a very strong demand zone. So this box that you see over here is a very strong demand zone, because here you can see long wicks. So these long wicks basically corresponds to the buyers. So we'll have to see if markets hold this demand zone, and if it doesn't, then look how much room do we have on the downside. Because if we break this level, if the bears are able to break this level, then it's going to be very, very difficult, because the next support is the 150-day moving average on the daily time frame and the 200-day moving average on the daily time frame. I want to say this briefly that I use pivot levels a lot in my trading. So these are the daily pivot levels. So on the daily time frame, S1 is going to act as a very good support, in my humble opinion. So be very mindful of that, and I just wanted to highlight those. Now, if you come to the intraday time frame, that is the 5 minute chart that I see. So in the 5 minute chart, if you look at today's action, we opened in a very choppy session. So if you see over here, we opened and we did nothing for almost first hour of the session. But then slowly but surely we started approach the S1 level, that is the pivot level on the 5 minute time frame. But we were not able to hold this level as well. So this is why technical analysis works. You can see how beautifully it has holded the S2 support level on the 5 minute time frame. So we have to be really patient and let the news, the data release news, digest in. And that's how everybody should trade. Normally I tend to prefer not trade during the first half an hour or first 45 minutes of the opening session. You may argue that you're losing on so much volatility, you can make so much, but then it's a double-edged sword because you also can lose so much. So markets normally tend to reveal its real trend after the first 30 or 45 minutes. So it is, in my humble opinion, a very good idea to not trade in the first half an hour or 45 minutes, and then do the trading in the direction of the markets. So for that I use a lot of EMAs, as you can see from the chart. So basically I use the most famous ones, that is 5, 9, 26, 50, 150, 100 and 200. So that is what I use, and this is the Bollinger Band, and the white line that you see is the anchored VWAP that I use a lot. So I keep things very simple. This is the volume. So I keep things very simple. So this is what happened in the 5 minute time frame. So on the daily chart, if you see, the main support lies around 14,400, and on the weekly the support lies around 14,367. So be mindful of those levels, and that will guide you a lot in the decisions that you make. Now again, I also want to discuss some news parameters, because we have a lot of news coming next week. So Monday seems to be quite quiet, not that much. Tuesday we have a lot of data after the first half an hour. Then Wednesday it's a lot of new home sales data. Thursday there's a big data of jobless claims and GDP report and all those. A lot of Fed speakers speaking. And then the main news that I wanted to discuss is the November 1st, that is next to next week. So we might have a very choppy next week, because the Federal Reserve Chairman Jerome Powell is going to speak on November 1st with the interest rate decision. So once that is clear, once his monetary stance is clear, only then we'll have a conclusive direction on the markets. So these are my insights and viewpoints on how we should have our trade, how we should have our game plan. And for all those who are interested into learning a lot, I write a lot of blogs, and I post a lot of videos on TradingView as well. So you might as well if possible, please do subscribe and like this page of mine. You can follow me on TradingView, and you can have I update TradingView a lot. So there's a lot of things that you may find helpful. So thanks so much for tuning in. And again, my name is Advait, and I plan to do this very, very frequently, at least once a day, so that the whole idea is to share the knowledge and get in touch with people who are really passionate about trading, and especially the Nasdaq futures, because I only do Nasdaq futures. So that's where I'm coming from, and I hope these insights help you as a trader. And let's build a meaningful community, and let's engage into deep conversations, insights, and let's grow together and learn together. That's the real idea. So yeah, with those thoughts, I would like to end the video, and thank you, really thank you for watching, and give it a thumbs up if you find value in it. And until next time, uh, thanks, have a great weekend, and bye.